Hi everyone, my name is Chris. With the recent market correction, I would like to talk about a few fintech companies that would be a good long-term investment. Why fintech? The growth of e-commerce and merchant adoption of new modes of payment such as e-wallets, QR code, and mobile apps have caused the use of cash to decline in the past decade. The pandemic has accelerated this digital penetration by a few years and caused an unprecedented increase in online spending. That's why fintech is a massively growing industry with room for multiple winners. The companies that I'm considering are Square, PayPal, and Upstart Holding, but I'm going to discuss only the first two in this video. Square is down 17% from the all-time high and 16% for PayPal correspondingly. With regular valuations such as price-to-earning ratio or price to sales, these two companies are arguably expensive stocks, but considering the growth potential and the ongoing market correction, we may have a good opportunities to buy here. In this video, we will discuss the latest update on these two companies and some of the risks and opportunities investing in them. As usual, this is not a financial advice. I'm just sharing my personal opinion. Always do your own research before making any investment decision. And check out the timeline on the video if you're only interested on specific stock. Okay, so the first company is Square. Square provides financial services and digital payment. The company has expanded to Europe and Australia, but most of its revenue is still generated in the US. They group their service into two ecosystems, which is seller business and cash app. As you can see from their investor presentation, the seller side provides a one-stop solution for merchants with all different services that they may need, such as hosting their website, points of sale software, managing appointments, payroll, and so on. The pandemic has accelerated this segment where millions of people suddenly became unemployed, and Square stepped into the void and helped people start business online, such as opening food truck, opening retail store, and so on. Square is an attractive option for small businesses because they are easy to use, can be set up quickly, and with reasonable price. It has also been successful in gaining larger merchants by adding new features and services to its seller ecosystem. And just a side note, larger merchants here is those with more than $125,000 annual gross payment volume. The type of the services that they provide have been there for a long time, but they are much improved and built with scale. They monetize this offering with a combination of transaction, subscription, and service fees. The second business, Cash App, provides all things considered financial service solutions directly to individual customers. The app allows users to store money, pay for things, and invest all in one place, even including cryptocurrencies like Bitcoin. The total addressable market for the Cash App business is still smaller compared to the seller side, but remember the Cash App is less mature but has a higher growth potential. The number of users, especially younger customers using the Cash App, is growing rapidly as it offers services like fractional shares, ETF, and cryptocurrency and peer-to-peer payments. They now have more than 60 million users, and like PayPal, Square's strategy with its Cash App is to become a super app, which means having additional features beyond financial services all in a single app. This helps explain why they bought music streaming service Tidal and provide an option for restaurant and store to have products delivered to customers. So why invest in Square? Square was a pandemic winner with significant increase in adoption of its seller business and Cash App. In my opinion, many would stick around due to the convenience and the increased value that Square services have provided. In addition, the trend to prefer digital payment over cash after the pandemic is also not expected to reverse. Most recently, Square announced acquisition of Afterpay, which is very beneficial and a direct fit with Square offerings. The acquired buy now and pay later service allow customers to finance their purchase and for merchants a way to win more customers. Moreover, Afterpay has a strong presence in Asia Pacific, and this could help Square to expand internationally and enter new markets. There are also opportunities for cross-selling Square services to Afterpay customers, and finally, the acquisition would allow Square to improve its gross margin as Afterpay is a much higher margin business. In terms of risk, Afterpay acquisition is an all-stock deal valued at $29 billion based on Square stock price when it was announced, so this could still change. This is certainly not cheap considering the 30% additional premium, but in my opinion the long-term growth potential with Square merging with Afterpay is good enough to justify this. The chance is low, but the deal could still fall through as it is subject to government or regulatory approval. So Square operates in highly lucrative business area with a lot of competition, so there's always potential that Square offering could be impacted by alternatives. On the seller business side, Square competes with Fiserv's Clover, and in the Cash app, it is competing with Venmo from PayPal. Square, however, is still in the early growth phase. For example, when compared to PayPal, who put more focus on profitability, is growing revenue much faster at annual compounding rate of more than 50% and 31% rate for its earnings correspondingly. This is very impressive, especially if you compare this with established peers like Visa or MasterCard. According to analyst estimates, Square revenue is expected to grow to $36 billion with net income of $2.4 billion by 2025. This revenue projection is more or less double the revenue expected this year, while earnings increased by more than 5 times. Given this estimate and historical earning multiples used to value Square stock, the price could reach $400 in a few years. As Square is still in the early growth phase, the other potential risk is increased interest rate, which could introduce volatility in the short term, but in my opinion, it has the potential to grow to one of the largest financial service company. The share price is relatively flat compared to 6 months ago, but at the same time, the valuation and the fundamental have improved. With the growth opportunities expected in the next few years, it's a good long-term investment in my opinion, and I would add over time, especially if the market correction continues. So the second company is PayPal, a much more established name compared to Square. It was ranked 60th as the best global brands in 2020 from Interbrand. PayPal offers technology platform enabling mobile and digital payments on behalf of customers and merchants worldwide. It has various brands partly due to aggressive acquisition strategy. You probably have already used some of the PayPal family brands like Venmo for peer-to-peer payments, Zoom for international fund transfer, Braintree, a full-stack payment platform for merchant app and website, Zettle, a small business solution for payment day-to-day management and facilitates funding, Hyperwallet provides mass payment capabilities for fast-growing global organizations, Honey, a shopping reward platform that automatically find and apply coupon codes for users as they shop on select sites, and finally Simility, a fraud protection and risk management platform for global businesses. As of the second quarter this year, as you can see from this investor update, PayPal had 403 million active accounts, including 32 million active merchants, a 16% increase year over year. It processed more than 1.1 trillion of total payment volume and generated 6 billion revenue in the quarters. It operates globally, but the US and the UK are accounting for 51% and 11% of its revenue. So this slide from PayPal annual report summarizes how PayPal platform serves both merchants and consumers. Individual customers can safely send payments to merchants, both for online and offline purchases, using a variety of funding sources as well as domestic and international peer-to-peer fund transfer. When shopping online, there's even an option to use PayPal credit to fund purchases, although it's currently limited to certain markets such as the US, UK, France, and Germany. PayPal also provides a fully integrated digital checkout for merchants of all sizes on mobile devices or in stores across all platforms and devices. With these options, merchants can securely receive payments from their customers. Merchants also benefit from other tools and services such as access to credit solution, fraud prevention and risk management solution, protections program against losses, and data analytics that help them to attract new customers and increase sales. The synergy between the consumer and merchant sides create more value for PayPal in the long terms. The more adoptions of PayPal from consumers, the more incentives for merchants to use PayPal. Also, by having visibilities into demand from both sides, PayPal could cross-sell products and services matching its user needs. Why invest in PayPal? In terms of growth, the company projects 25% annual compounding growth rate until 2025 for total payment volume and 15% annual growth rate for the number of active customers. It's worth mentioning that the number of payment transactions per account continues to increase. As they announced in the last Q2 earnings, they are ready to launch a super app through which PayPal aims to offer a host of consumer services such as high-yield saving, bill pay, subscription management, budgeting tool sets, direct deposit capabilities, and so on. This would help drive growth in the long term, in addition to the enhanced commerce capabilities for merchants, crypto support, subscription management, and buy now pay later functionality. So PayPal buy now and pay later product was launched in mid-2020 and it already generated 20 million transactions from 650,000 merchants and 7 million users. With the sheer number of users that PayPal has, the growth potential here is massive. To further increase PayPal's position in this service, PayPal recently announced acquisition of Paydi, a buy now pay later pioneer in Japan, for 2.7 billion. The other thing that I like about the company is the solid balance sheet and free cash flow. The impact of eBay exiting PayPal platform this year is slightly more than expected and has caused pressure to the share price after the second quarter earnings, as the company projected lower revenue growth in the next quarter. However, PayPal still expects to generate more than 5 billion in free cash flow in 2021 and double it to 10 billion in 2025. This strong financial position allows PayPal to continue investing in its business. In terms of risks, there's a lot of competition in global payment, including with large tech companies like Apple, Google, and Amazon. For digital payment, it competes with Square and Stripe. Despite the competition, PayPal is still in a good position with strong financial and its massive scale of operation focused on online payment and digital wallets. By operating in more than 200 countries, due to the nature of its business, PayPal is also subject to complex regulatory requirements. Despite the risks and the lower revenue growth expected for the remainder of the year because of losing eBay, the outlook for the next year and beyond look bright for PayPal. It also trades at reasonably attractive valuation compared to its growth potential. I already have PayPal and Square in my portfolio. I'll continue to add more, especially if the market correction continues. Anyway, this is just my personal opinion, not financial advice. And good luck with your investment.